there is kind of plenty of little things to worry about at the end of this quarter.
Good morning, Bruno. So could you talk us through the major changes in the global markets since we last met 2 weeks ago?
Good morning, Jessica. Yes, let's maybe start with a pattern which occurred last week on the 10-year yield. We remember that the 10-year yield made an island reversal in mid-February, and then we had a nice rise from 1.56 towards 2%. That has now somehow been pondered by the fact that we've got a black candle, which is engulfing pattern, so it's a reversal of the previous week. And that happens at the levels which is close to the former psychological level of 2%, which was reached intra-week. So if we look now a little bit on the daily charts, we notice that, yes, we have already broken first the rising support trend line here. We're probably going to retest at 195, 196, kind of a double top, the resistance area. And then we could move towards 180, 175 in something which could be a more risk-averse trade. That means people will fly a little bit to bonds because they think other equity classes are too high.
Sure. So, Bruno, what would be the influence on the US financial sector?
Of course, if the yield stops rising, that will have a little bit of a negative influence on the financial sector, because when yields were rising, it was improving the margins of financials. And here we already retraced 2/3 of this big move from November to February. So it is a logical place where there is a floor, so we enter a trading range, and we also notice on the stochastics here that the oscillator is in an overbought situation and could cross down. We also noticed that the relative strength of financial versus the S&P, which had been rising at the end of February, is now kind of stalling and flat.
And Bruno, what about oil? Is there still potential for a further rebound?
The oil was the main leader from the rebound, if you wish. Look at this move from 51 to 26. It's already retraced 62%. It's usually a place where it stops for a little while. We also notice this 40 weeks moving average coming all the way to the area of 42. We notice also that this 40 level, this horizontal line, is also key levels. In history, it also has been very important levels. So with an oscillators which is very overbought and turning down, with copper which is flat here, it's very likely that these prices are going to enter kind of a trading range between 41 and 37. Not a big fall, but certainly kind of a pause.
And in that case, would the US energy sector also make a pause?
If we look at the long-term charts on a weekly basis of energy, we see that we are just like previously in two occasions along this major trend line. And trend line tend to do their job. That means here that it has been capping the market in the past. It's expected also to cap the market, especially because here we have also overbought stochastics on the long term, and we have flattening ratio of the relative strength of the energy sector versus the S&P.
And in your opinion, is that enough to stop the rebound of the global index of the S&P 500?
Well, that's the big questions, right? Everybody now noticed two things. The first, long term, is this big moving average, 40 weeks or 200 days, which is now below the current price. It's at 2020 and we are at 2050. So people, you kind of get excited. However, technicians are a little bit more cautious because they say to get excited, you need also the moving average direction, which is still declining, to turn up, and that's not yet the case. In addition, if you look at the levels of the VIX index, which is the fear index, it's back to 14%, and this 14% is also levels we saw in the mid of last year, where it was a level where it rebounded, and at a time when the S&P was making a top. So it's a situation which could be a little bit toppy.
So in your opinion, when do we get a signal that the rise is over?
Then we need to look at the daily charts. And what do we have? We have, since February, a very orderly rising trend line. And we are coming close to former highs, 2080, which is not far away, 30 pips, 30 tick away from the 2050 area. So what we have is also the momentum of this rise, which has made three kind of peaks. And there could be right now, with the declining momentum, some kind of bearish divergence. So let's make things simple. Let's look at this support trend line and notice that 2040 is the key level to watch for the coming days. Once we move below 2040, it's likely that we could have a surprise and a decline toward the cloud. And the cloud is pretty low right now. It's at 1950. So here there is probably something to watch carefully.
So does this mean that emerging markets will stop their advance?
Emerging market has been rebounding, and we noticed that with the raise of the ratio of emerging market here, Brazil, for example, versus the S&P. In the end of February, it rose a lot, but now in March, it has been kind of stalling. It's flat, so it's making the same thing as the S&P. And here we see it's probably broken above a big descending trend line, but it's stalling around the Bollinger Bands, and it is overbought. So it's probably likely it's going to behave like the S&P, and if the S&P goes into a correction, so will the emerging market.
And does this situation also apply for Japan?
Well, Japan used to be nice, but it used to be because as we see really all the months of March, we have been in the trading range. It's not been able to move above 17,300, 400. And right now, if it fails to do so, the risk with a bearish divergence here on the oscillators is more a retest of the 16,000 than just breaking up. So the news are really kind of neutral here.
And Bruno, finally, in your opinion, is Europe in the same situation?
Well, let's see. It looks like almost like the Nikkei. It's also in a small trading range. Nothing much is happening on the relative strength versus the S&P. So it has been even declining during part of March, and now it's just about flat. So it's not going to make big things. So the only things that we are going to notice here is that we are within the cloud, which is basically holding the market. And the cloud has more space on the way down to correct a little bit toward 2830 than just on the way up, which is a kind of a strong ceiling. So all in all, despite the fact that the S&P has moved up 12% from the bottom in February, there is kind of plenty of little things to worry about at the end of this quarter.
Great. Well, Bruno, thank you so much for coming in once again and sharing your insights.
You're welcome.
That's all from myself and Bruno once again, but we'll be back shortly. But for all the latest updates, keep clicking back to Dukascopy TV.